Hello students, hope in this hard situation of COVID-19 attack, all are doing well. As we all know, the fact that because of this situation, things are a little tough nowadays for direct teaching method. So I am providing some subject related and content oriented notes through indirect teaching method. Today I am going to discuss the management accounting for the students of class 12, those who are going to appear for the Indian School Certificate Examination to be held in 2021. Students, you will have to attempt 2 questions out of 3 from the management accounting portion, and 3 questions will be from the first topic, that is comparative and the common size statement, that is financial statement analysis. The second one is your cash flow statement, and the third one is ratio analysis. We have already covered the topic comparative and the common size statement, and today we are going to take the cash flow statement. So what is cash flow statement? Cash flow statement comprises of 3 words, that is cash, flow plus statement. So what is cash? Cash, anybody can say that is money, but in accounting term, cash means money and cash equivalents. Now what is cash equivalents? Cash equivalent means the demand draft, the check, the bank balance and the marketable securities. Now what is the marketable securities here? All securities are not known as marketable securities. Marketable securities are that you can sell in the market at any time and collect the money within 48 hours. Is it clear? So cash includes the short term, whatever the cash equivalents are, it includes the money, demand draft, bank balance, check, marketable securities, short term investments, all are there in cash and cash equivalents. Now come to the second word, that is flow. What is flow? Flow is the change. Flow doesn't mean it's stagnant. It is the change. That is the value or the cash changing position. Let's take an example. In 2019, the value of a machinery or value of whatever the plant and machinery a company, a firm has, that is 1 lakh rupees, and in 2021 the value changes to 1,50,000 rupees. So in cash flow statement, while doing the cash flow statement, we are not going to record this 1 lakh and 1,50,000. We are going to record the changing position of cash, that is the 50,000 rupees. Is it clear? So, and that is flow. That is the changing position of the cash. Now the third thing is the statement. Statement means we are not going to make any ledger. We are not doing the journals. We are going to make a document. Statement means a document. That is, the cash flow statement is we are going to make a document which shows the changing position of cash. Now, how in a business concern the position of the cash changes? Due to 2 factors. One is the inflow of cash. When in the business concern, inflow of cash is there, that is cash is coming, and outflow of cash, that is cash is going from the business concern. So what is the incoming of cash, or how the cash is coming in the company? That is when we are selling something, sell some goods. So cash flow statement, here we are going to record the incoming of cash in the firm and outgoing of cash from the firm. Incoming of cash in the firm and outgoing of cash from the firm. So how this cash is coming in the firm and going from the firm? That is the receipt and payment of cash. Now listen, inflow of cash. How it will be inflow of cash? When the debtors are giving money to the business concern, when there is a sale of machinery and we are getting the fund, in the business concern is getting the fund. Opposite to this, how the outgoing of cash will take place? That is when we are selling the purchasing some machinery. We are purchasing some machinery, we are purchasing raw material from the creditors. Then what it is? There is outflow of cash from the firm. Now listen, according to AS3 or Accounting Standard 3, what is that? What is the cash flow statement? Cash flow statements here recorded all the cash transaction in a statement form. That cash transaction is inflow of cash and outgoing of cash. Now what is the difference between a cash book and a cash flow statement? Yes, Difference is in the cash book, we have two sides, that is debit and credit. We are recording the receipt sides in the debit side, and in the credit side, we are going to record the payments one. And in the cash flow statement, it's a compressed cash book. So compressed cash book, and here the similarities are also there. What is the similarities? Both are made for the 12 months and both contain the cash transactions. But what is the dissimilarity over here? Cash book contains each transactions according to the date wise, but cash flow statements grouped the transaction into different activities. What are those activities? We will discuss afterwards. So here the activities of that cash transactions are classified into groups. Is it clear? So we can say that in cash, we will take all those bank balance, cash equivalent, marketables, investment, demand deposit, everything. But what for we are making this cash flow statement? What is the use of cash flow statement? That is, it's a tool of handling the cash management. It's an important decision we can make while seeing the cash of the firm. Then transactions are grouped, then important for decision making, and it's a comparative study of 2 years. 2 years, that means the base year 2019, as we discussed in the machinery case, 2019 one position of the machinery and 2020. So it studies the comparative analysis of that two position. Then come to limitation of cash flow statement. Some limitations are also there. So that limitation is non-cash transactions are not recorded in this cash flow statement. First one. Second one, it is not a substitute for income statement. Third one is it's not a substitute for the balance sheet also. So here we will include all cash transactions only, whatever in hand, whatever at bank, whatever checks and demand drafts are there, short-term investments are there, short-term deposits with the banks are there. We will include all these things. So now we can say that your whatever any statement showing the changes of cash for a given period is known as cash flow statement. Now listen students, when we are going to see that in a business concern, you can easily see the business, how the inflow of cash is there. That is how the cash is coming. That is the debtors when they are paying the money, the cash is coming to the business, sales of machinery, then again inflow of cash, then comes to how it is outgoing of cash is there or outflow of cash when we are going to pay the money to the creditors. Outflow of cash is also there when we are purchasing the machinery. Now come to the point which we discussed, we said that we will discuss, that is what are the three activities under which we will group this one. This cash and cash equivalents, how we will group, how we will classify this. In the cash flow statement, we will classify the activities according to three portions. The first one is the operating activities, second is the investing activities, and the third one is financing activities. So we will discuss afterwards. This is in the next episode, we will discuss about this operating activities, investing, and the financing activities. We divide the cash transactions of a business in these three groups. Now come to some more example I'm going to give you, that of inflow of cash and outflow of cash. Inflow of cash, how it will come to the firm? It is according to cash sales, cash received from the trade receivable, interest or commission received if the firm is or the business concern is receiving any interest or commission. That will also come. Then cash received from the sale of fixed assets. Any fixed assets is there we are getting the cash, and loan and advance received. If the firm is received, we are not talking about the proprietor, we are talking about the business concern. That loan and advance they received, that also comes in the cash inflow. Inflow of cash, that means for the business concern the cash is coming. And how we will classify the outflow of cash here? That is any cash purchases. We have done the cash, whatever the purchases, not the credit purchase. Okay students, not the credit purchase. That is the cash purchase. We are purchasing some goods, raw material, machinery, not in credit, in cash, in demand draft, in check, while whatever matter. Then cash paid to the trade payables. Whoever the trade payables are there for the business concern, to the creditors are there, we are going to pay money to them. That also comes in the outflow of cash because cash is going out from the business concern. Then cash paid for expenses. Any expenses are there for the business concern, we are paying the cash for that, it will also include over there. We sell the fixed assets of the firm. Any fixed assets are there for the firm? 2019 disposition, as we discussed earlier, 2019 1 lakh rupees. And then if we are going to sell it, naturally our cash position will decrease, and we sell it, and now the machinery cost is, let it be 50,000 or let it be 60,000. Then what was the earlier position? 2019, that is 1 lakh rupees, and then comes to, it decrease the values, it comes to 50 or 60. Then we will subtract that one, we will deduct that one, and we will get the changing position of that cash. Is it clear? Then opposite to loan taken on all this, when money is coming to the firm, opposite to this is we are giving the advance, we are giving the loans to the third party, to anybody else. So those loans and advances given also included over there. Is it clear, students? Now listen, in the next class we are going to know about the different groups, that is the operating one, financing, investing, and all this. Today up to here only. Okay students, goodbye, see you again.